Question 741. When a seller accepts the actions of an agent, even without a previous agreement, then an agency may be created by A. Oral agreement, B. Implied agreement, C. Express agreement, D. Ratification. Correct answer is D. Ratification. While an oral agreement can create an agency relationship, it's not the specific scenario described in the question. An implied agreement can also create an agency relationship, but in this case, the seller's acceptance of the agent's actions would be the more relevant factor. An express agreement is a written or oral agreement that explicitly creates an agency relationship. While this is possible, the question specifically mentions a situation where there was no previous agreement. Ratification occurs when a principal, in this case, the seller, accepts the actions of an agent, even if there was no prior agreement to create an agency relationship. This can happen if the principal benefits from the agent's actions or fails to object within a reasonable time. Therefore, ratification is the most appropriate answer in this context. Question 742. Regulation Z. A is also known as the Truth in Lending Act. B. Governs the Zoom rate, the interest rates for high-yield bonds. C. Requires that borrowers be informed of the true costs of credit. D. Both A and C. Correct answer is D. Both A and C. The Zoom rate is not a term associated with Regulation Z. It might be a term used in a different context, such as finance or investments. Regulation Z is the common name given to the set of rules issued by the Federal Reserve Board, now the Consumer Financial Protection Bureau or CFPB, to implement the Truth in Lending Act, TILA. So, they are inextricably linked. Regulation Z's main goal is to ensure borrowers understand the true cost of credit. It mandates that lenders clearly disclose all relevant terms, such as the annual percentage rate, APR, total finance charges, and the total amount to be paid. This empowers consumers to make informed financial decisions. Question 743. A pest control inspection of a property in escrow finds no termites, but conditions are discovered which might lead to an infestation later. Whose responsibility is it to pay for correcting these conditions? A. The buyer must pay for the conditions to be corrected. B. The seller must pay for the conditions to be corrected. C. The escrow company must pay for the condition to be corrected. D. None of the above. Correct answer is D. None of the above. In California, a structural pest control inspection report, often called a termite report, is not legally required for a property sale by state law. However, lenders often require it, and it's a common contingency in purchase agreements. These reports typically divide findings into two sections. Section 1 deals with active infestations or infections, like live termites or significant dry rot, and the damage they've caused. Section 2 identifies conditions that are conducive to future infestations or infections, e.g., earth-to-wood contact, excessive moisture, faulty grade levels, insufficient ventilation. The question refers to these Section 2 conditions. There is no legal mandate that requires either the buyer or the seller to pay for the correction of Section 2 items. This becomes a point of negotiation between the buyer and the seller, typically addressed in the purchase agreement or an addendum to it. The seller might agree to correct Section 2 items to make the property more attractive, to facilitate financing, or as part of the overall negotiation. The buyer might accept responsibility for Section 2 items, especially in a competitive market or if they are getting a good deal on the property. The escrow company's role is to facilitate the closing based on the instructions provided by the buyer and seller in their purchase agreement and subsequent escrow instructions. The escrow company does not have the authority to decide who pays for repairs unless explicitly instructed by both parties. Because this responsibility is negotiable and not legally set for either party, none of the above is the correct answer. The buyer and seller must reach a mutual agreement on who pays. Question 744. A contingency clause in an agreement should A. State a time limit for its conditions to be met. B. State how the parties will be informed of the fulfillment or waiving of the clause. C. Both A and B. D. Neither A nor B. Correct answer is C. Both A and B. A well-drafted contingency clause in a real estate agreement is crucial for protecting the parties involved. For a contingency to be effective and clear, it absolutely should. A. State a time limit for its conditions to be met. Without a time limit, a contingency could drag on indefinitely, creating uncertainty and delaying the transaction. A clear deadline ensures that all parties know by when the condition must be satisfied or waived. B. State how the parties will be informed of the fulfillment or waiving of the clause. Clarity on notification is essential. This prevents disputes over whether a condition was met or waived within the specified timeframe. Question 745. Which of the following statements is correct regarding a buyer's agent? A. Buyer's agents are not entitled to a commission. B. Being a buyer's agent is a non-permissible arrangement in California. C. Compensation for a buyer's agent may be provided by another party besides the buyer. D. Buyer's agents do not enter into fiduciary relationship with the buyer. Correct answer is C. Compensation for a buyer's agent may be provided by another party besides the buyer. In California, buyer's agents typically work on a commission basis. However, the source of that commission can vary. It's common for the seller to pay a commission to the listing agent, who might then share a portion of that commission with the buyer's agent. This arrangement is known as a cooperative sale. The important point is that buyer's agents have a fiduciary duty to represent the buyer's interests and may receive compensation from various sources. In fact, recent changes stemming from the NAR settlement have reinforced the need for clear written buyer agency agreements. While recent rule changes, like those stemming from the 2024 NAR settlement, aim to make buyer agent compensation more transparent and directly negotiated with the buyer, it is still very common for sellers to offer to pay the buyer's agent commission as a concession or as part of the overall transaction to make the deal more attractive. The listing agent may also be authorized to pay the buyer's agent. So, the buyer's agent's compensation doesn't have to come directly out of the buyer's pocket, although the buyer is ultimately responsible for their agent's fee. A buyer's agent, like any real estate agent representing a client, enters into a fiduciary relationship with the buyer. This means they owe the buyer duties of utmost care, integrity, honesty, and loyalty, always acting in the buyer's best interests. A buyer's agent, like any real estate agent representing a client, enters into a fiduciary relationship with the buyer. Question 746. A purchase agreement must include an A. Acceleration clause. B. Release clause. C. Executory clause. D. Alienation clause. Correct answer is C. Executory clause. Acceleration clause and alienation clause. These are specific clauses found in loan documents, promissory notes, deeds of trust, mortgages, not typically in the purchase agreement itself. Release clause. This is specific to blanket mortgages and allows for the release of portions of property from a lien. Not a standard or required clause for every purchase agreement. A real estate purchase agreement, from the moment it's signed until the closing, when title is transferred and funds are exchanged, is an executory contract. This means that both parties have promises or duties that are yet to be performed. Every core obligation within the purchase agreement, the buyer's promise to pay, the seller's promise to convey title, is a promise of future performance. These are the fundamental reasons the contract exists. Without such promises, it wouldn't be a binding agreement to buy and sell. Question 747. Which of the following is not essential to the creation of an agency relationship? A. Principal's competency. B. Agreement to pay consideration. C. Principal's consent. D. Establishment of a fiduciary arrangement. Correct answer is B. Agreement to pay consideration. The principal, the person who grants authority to the agent, must be legally competent to enter into a contract. If the principal lacks competency, e.g., is a minor or is mentally incapacitated, the agency relationship may be void or voidable. This is essential. An agency relationship is based on consent. The principal must willingly agree to allow the agent to act on their behalf, and the agent must agree to do so. The principal must willingly agree to allow the agent to act on their behalf, and the agent must agree to do so. This is essential. Once an agency relationship is created, a fiduciary duty automatically arises. This means the agent owes the principal duties of loyalty, care, obedience, accountability, and disclosure. This is an inherent characteristic and consequence of an agency relationship, making its establishment essential to the nature of the relationship once formed. While agents are almost always paid for their services, consideration, an agency relationship does not require consideration to be legally created. An agency can be gratuitous, without pay. For example, if you ask a friend to pick up your mail while you're away, and they agree, an agency relationship is created, even if you don't pay them. The friend is acting as your agent. Therefore, the agreement to pay consideration is not essential for the creation of an agency relationship, although it's almost always present in professional agency relationships like real estate. Question 748. If a contract is agreed to under the threat of duress, it is A. Valid, B. Voidable, C. Enforceable under certain circumstances, D. None of the above. Correct answer is B. Voidable. Duress refers to coercion, such as threats of physical harm, economic harm, or wrongful imprisonment, that forces someone to enter into a contract against their will. A contract entered into under duress is voidable at the option of the innocent or injured party, the one subjected to the duress. This means the contract is considered valid until the coerced party chooses to disaffirm or void it. If the coerced party decides to uphold the contract, perhaps because the duress has ceased and they find the terms acceptable, it remains enforceable. While it might become enforceable if the coerced party chooses not to void it, the initial formation under duress makes it voidable, giving the coerced party the power to cancel it. Enforceable under certain circumstances is too broad and doesn't capture the inherent defect. Question 749. John is currently keeping $5,000 in an impound account on a trust deed on which he is getting payments from Gwendolyn. Which of the following is true regarding the impound account? A. The account can never exceed $5,000. B. The account must have a balance maintained that is equal to 1 year's taxes and insurance. C. The account can generate interest for John if he keeps it in a saving bank. D. The account benefits the trustor and the beneficiary. Correct answer is D. The account benefits the trustor and the beneficiary. An impound account, also known as an escrow account, is generally set up by the lender to collect funds from the borrower to pay for property taxes and homeowners' insurance premiums as they become due. The purpose is to ensure these critical payments are made, protecting the lender's security interest in the property. The balance in an impound account fluctuates. It typically builds up between tax and insurance payment due dates and then decreases when those payments are made. The required balance is tied to the amount of taxes and insurance, not a fixed cap like $5,000 unless specified in a very unusual loan agreement. Federal regulations, like RESPA, and common lending practices allow lenders to collect a cushion, typically equal to 2 months' worth of impound payments, in addition to the amount needed to cover upcoming tax and insurance bills. So, the balance will generally exceed 1 year's taxes and insurance at certain points, especially right after a payment is made and before the next major bill is due. The account collects enough to pay a year's worth, but the balance maintained isn't a fixed year's worth. In the scenario, John is the beneficiary, lender, receiving payments from Gwendolyn. The impound account holds Gwendolyn's money to pay her taxes and insurance. In California, lenders are generally required to pay interest on impound accounts if the loan is secured by a 1 to 4 family residence. This interest is credited to the borrower, Gwendolyn, not the lender, John. So, if the account generates interest, it benefits Gwendolyn, not John. The primary benefit for the lender, John, is that it ensures property taxes and insurance premiums are paid on time. This protects the lender's collateral, the property, from tax liens and ensures it's insured against damage, reducing the lender's risk. For the borrower, Gwendolyn, it offers convenience. Instead of having to save up large lump sums for annual or semi-annual tax and insurance bills, they pay a smaller, manageable amount each month along with their mortgage payment. It also prevents them from inadvertently missing these crucial payments. Therefore, the most accurate statement is that the impound account benefits both the borrower and the lender. Question 750. Thomas, an elderly man with a collection of classic cars, lives next door to Bobby, a 16-year-old high school junior, and his family. Thomas promises that if Bobby shovels snow from the sidewalk in front of Thomas's house during the upcoming winter, then Thomas will let Bobby select a car to keep from the older man's collection. Bobby does, in fact, keeps the sidewalk free from snow throughout the winter. In April, however, a few days before Bobby plans to pick out his car, Thomas dies. Thomas's estate administrator refuses to release any of the cars to Bobby, who sues. Bobby's lawsuit will probably A. Succeed, because Thomas is not present to contradict Bobby's version of events. B. Fail, because Bobby is a minor. C. Fail, because shoveling snow does not meet the standard of sufficient consideration for a promise to provide a car. D. Succeed, because courts generally do not rule on the relative value of consideration. Correct answer is D. Succeed, because courts generally do not rule on the relative value of consideration. While Thomas's absence might make it harder to contest Bobby's claims about the agreement, the legal validity of the contract itself is the primary issue, not merely the ability to contradict. In California, contracts entered into by minors, those under 18, are generally voidable at the option of the minor. However, if the minor performs their part of the contract, the adult party is typically bound. Bobby fully performed. The minor's lack of capacity usually protects the minor, not the other party trying to escape the contract. The rule that a minor's contract is voidable by the minor means the adult party is generally held to their end if the minor performs. Courts typically do not evaluate the adequacy or fairness of consideration, as long as some bargained for legal detriment or benefit exists. The act of shoveling snow, though seemingly minor compared to a car, is a definite performance of a requested act, which constitutes valid consideration. It's not a pre-existing duty, and it was done in exchange for the promise. In a unilateral contract where the offeree, Bobby, has fully performed before the offerer's, Thomas's, death, the contract is generally binding on the deceased offerer's estate. The offer could not be revoked once substantial performance began, and here, performance was completed.